16th of September 2015. I'm Greg McKenna, and here's the morning market wrap. Traders appear to be continuing to position in the run-up to the Fed decision at 4 a.m. Friday, Sydney and Melbourne time, and Brisbane, of course. Last night we saw US stocks, particularly the S&P, which is my favourite index, bounce off the bottom of the wedge and head higher. The Dow was up 228 points for a 1.4% gain. The S&P was up 25 odd points for a 1.28% gain, and the Nasdaq was up 54 points for a 1.14% gain. Those markets are just mapping out the pattern that we expected a week or so ago in the run-up to the data. Retail sales last night had a little bit for everything. I actually think they were quite good. Of course, they undershot 0.2 versus 0.3 expected, but the 0.1 that we lost this month was added to last month's data. So on balance, the consumer looks pretty good. On the other hand, the New York Empire State Manufacturing Index collapsed down to the minus 14s, and industrial production was down. So those two indicators were, a counterbalance to the reasonably strong retail sales. But I think if you have a look at whether it's the US or the globe, we are a service-based economy. What people are doing is more than just what the manufacturing sector is doing. So I discount what's happening in manufacturing a little bit. The other thing I should note about retail sales in the US last night was that they were down because of the fall in petrol prices. That's a real positive, because what it means is there's more money in people's pockets. Now, they don't necessarily have to spend it on any given month, but there's more money there to circulate through the economy, whether it's to pay down debt, whether it's to borrow, whether it's to put in the stock market, whether it's to do whatever it is. The reality is lower petrol prices, lower oil prices, and oil last night might have valued 2.5% to $45, but it's still pretty cheap. There's more money in people's pockets, whether you're here in Australia or you are in the US or the UK or any of those big markets. So Europe had a good night too. Their markets are up. The FTSE was up 0.87%. The DAX was up 0.5%, and the CAC in France, in Paris, was up 1%. That was a positive. Coming after yesterday's terrible price action in Asia, where Shanghai collapsed again, even though the government is doing its best to pump money into the economy, just highlights that we've still got some issues in our region and in emerging markets with growth. The Aussie market today should have a much better day. Futures are indicating that it's going to be up 58 points. But coming after a 1.5% fall yesterday, you'd certainly hope that was the case. If I wanted to just quickly share with you a couple of charts that caught my eye. I guess as we lead up to the Fed tonight, it's worth noting again the heavyweight hitters from Deutsche Bank around the globe put out a piece yesterday saying that the Fed should hike this week. Strangely, they don't think it will. They think it'll probably wait till October. But they made a really compelling case, and hopefully I'll have a piece out of Business Insider later on with seven key reasons. But I'll just show you this one chart here from my piece this morning at Business Insider. You can see that the number of job openings. Right, so that piece here. So this is the number of people available to work relative to job openings. Right, so it's fallen down to the pre-crisis average. That in itself is an amazing statistic. When you think about where the US economy. Now, what that means, and there was another piece on Business Insider by one of my colleagues in the US last night. What that means, of course, is that people are finding jobs. There's less people available. Now, what does that mean? If you just think about A plus B equals C, then the price of people, the price of employees has to start rising. And while the US doesn't have an inflation problem, if we look a couple of years down the track, perhaps it will. I'm in the camp that believes inflation is more a aggregate demand-driven issue. But if I argue that everyone's working, not everyone, but 5% unemployment, a lot of people are working, and they are spending money in the economy, then aggregate demand is going to go up. So you should see inflation start to moderate. Now, what does that all mean? That means that the Fed has some big decisions to make tonight. Now, obviously, we've got CPI and tomorrow. Obviously, we've got CPI out again in the States tonight, so that'll be important. CPI in Britain last night was flat, or back to flat, I should say. And what that's done is it's really reinforced that the hawkishness that we've been seeing from, the different members of the MPC from the Bank of England is really not supported by the inflation data. Once again, a lot of those low or weak inflation data is going to be transitory because of the oil price. And you might say, yes, but oil's staying low, and it is. But don't forget, CPI, like GDP, is a quarter over or year over and those sorts of things. So once the initial hit is made, then you start to see prices rise again. And as long as deflation doesn't get entrenched in the minds of people like it did in Japan, then they just go about their normal business, and a few cents here and a few cents there, and you get over time you get back to 2%. It's only in a really, really weak economy that inflation should stay down here at zero, or it's only if Goldman Sachs are right and oil's going to $20 that inflation is going to stay lower for longer than the central banks believe it will. Now, if we just have a quick look at some of the things I'm watching today on the market, the Aussie dollar hit my fast moving average. Yep, hit my fast moving average just here yesterday. That was the trigger to sell. More medium term, my system says it should test this this downtrend line and could actually break up through 72 cents, but I don't have a position on at the moment. Rather, I'm respecting, I'll blow that up so you can make some sense of it. I'm respecting the lows here in Sterling Aussie, but I'm thinking that Sterling Aussie might actually provide a nice non-US dollar bet, and we certainly saw that last night in the move in sterling, which was a full cent lower at one stage. That's not the chart I want. If we have a look at euro as well, we can see, and I'll blow that up for you as well, shoulder, head, shoulder, breakout level. So I'm going to say that this 111.95 to 112 sort of 40 region is the support zone. It's a 50-point support zone. If it was to break through there, then you've got 110.80, 109.50, those kind of things coming down the line. The other chart I'm looking at and still watching as a global bellwether is this oil chart. And if I blow it up a little bit, it's got a nice flat bottom, and it's got a sinking, downtrend line kind of thing here. For the moment, Davis would probably say you've got a box, so you've either got to break through this high here or this low there. Either way, I will be going with that break. So we'll see how that goes over the next few days. At the moment, though, there's no real catalyst or reason to trade. In Australia today, we've got the Westpac leading index, and of course, Guy Debelle talks in a little while in this morning, and we'll see what he's got to talk about, because he's talking about interest rates, bonds, and China. So there should be plenty for him to discuss there. Tonight, CPI in the US, of course, is going to be a big one. And of course, I haven't talked about it. You know what it looks like. That, flat top wedge pattern in the S&P 500 is going to come to some sort of resolution in the next couple of days. Rich Barry, who's the NYC floor governor, put out a piece that my colleague Miles Udland from BI New York covered, and it's in my 20 seconds piece at Business Insider you can have a look at. But I just want to quote what Barry says, because I tend to agree. I've got a flat top rather than the triangle-y, more triangle-y pattern he's got, because he's taken a couple of tops out. But he said, triangle patterns on charts referred to as coils. Can you see why? And he's got the chart, and you can see that in 20 seconds. As the upper and lower parts of the triangle get closer together, the battle between the bulls and the bears gets more intense, and the suspense builds. Obviously, at some point, prices are going to move outside the triangle boundaries, but will they move higher or lower? Psychological energy coils up like a spring inside of the triangle, and the closer the lines get, the bigger the inevitable breakout will be. That tends to be how these markets work. You can often get a failed break to the top side and then a reversal, which is what you might get if the Fed passes. I'm in the camp that says the Fed should move rates this week. I think the US economy is ready for it, and it's time for them to get off the pot. But we'll know Friday morning. So that's about it for me. Aussie market should do better. We'll wait and see what China does. Wait for that data. The Bell might have something interesting to say. The Aussie dollar looks constrained below that 71.65 kind of region until we do get some more information. But I will be watching the Westpac leading index today. It's a third tier issue, I guess, in terms of Australian growth. But given the discussion that we're having at the moment about where is growth, and given that the RBA seemed to leave the door a little bit ajar yesterday for further easings, I'll be looking to see what that's indicating. Bill Evans in his weekly suggested last Friday that it could be weaker, but we'll keep an eye on it nonetheless. So that's it from me. Have a great Wednesday, and I'll see you tomorrow morning around 9 o'clock again. I'm Greg McKenna. Bye for now.